Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Welcome. You're watching Business Today Television. This is Market Today and I'm Sakshi Batra. Well, the current market setup is the perfect case for an optimist really taking on the pessimist. The optimist would actually suggest that the Nifty ended lower yesterday. The dips got bought into, as evident from the recovery of nearly 200 points on the index. On the other hand, the pessimist would actually say that the Nifty could not sustain at higher levels. It fell 70 points from the highs and even closed below the 21,500 mark, a level that it had not closed below since December of 26. Now, with Thursday's drop, the Nifty is already down almost 2% for the week, perhaps is set for its biggest weekly drop since October last year. But is the correction done for now? We will tell you all of it, but first up, the top headlines this hour. Indian stocks are likely to snap a 3-day fall on Friday as improved overseas cues and a decent correction result in juicier entry points for new investors. Pharma, auto, IT stocks will be in focus. Third quarter earnings will continue to influence sentiment on the Wall Street as markets reward outstanding growth and punish underperformers. Traders are advised to be cautious on the long side. Very good morning to all our viewers present this morning with us. Well, after falling more than 800 points from the record high levels, the Nifty has just shown about 177 points of a recovery from the day's low of around 21,286. Now, for the week, we've actually seen that the Nifty is down by 1.9%. I'm now joined by a special guest to help us really navigate what is in the offering for the last trading session of the week and, of course, the week ahead going forward as well. With us joining in is Mr. Kiran Jani, Head of Technical Research, Jainam Broking. Kiran, very good morning to you. Thanks a lot for taking the time out for this discussion. Tell us, what is the sense that you're already getting for the markets? Of course, overnight, we've got positive news. Remember, the global markets, especially the US markets, the NASDAQ is at a record high, S&P 500 just shy of all-time highs as well. Asian markets opening positive. It was the tech-led stocks that have actually led to a recovery in the global stocks. Does that, and the GIFT Nifty also indicating a positive opening for the Indian markets as well. What is the sense that you're making for the markets today?
Very good morning, everyone, and thank you for having us on the show. So basically, we can see multiple reasons for the market. Let's start with the global cues. As you mentioned about the NASDAQ and the technology shares are heading for the new highs and at record level highs. We have already seen this rally since December. The reason behind for this rally is Fed chairman and Fed policymaker has said that this year we probably see 0.75 basis points of rate cut. And because of that news, we are seeing that the market already cheering and technology shares basically participating in this rally. Now, coming to the domestic level, we do not have any kind of negative cues from our market, any domestic reason or from government side or from anywhere. So market looking at macro reason or macro basis, there is no negative reason, number one. Number two, we have seen 2.5% kind of a fall during this week. Reason, just a technical reason. Number one, market and the entire index was trading into the overbought zone. So this profit booking has to come, and it is a healthy profit booking. Definitely, we can see during this correction, we are seeing that Nifty is taking support somewhere around 20 days, whereas Bank Nifty retested its 50 days and even 100 days moving average. Yesterday, we have seen the dip has bought, and it is a perfect example that buy on dips is the opportunity where we are finding multiple support. Coming to the level wise, Nifty PCR ratio is trading somewhere around 0.8, is generally considered as an oversold territory, number one. Technically, if we are checking a daily chart, Nifty momentum indicator is trading into the neutral zone. So as of now, we are not expecting any further downside as of now. We have seen during mid December, Nifty has taken a support from somewhere around 21,500 to 400. We are again into that zone only. So yesterday's low going to be a pivot low. If market is not breaking that low, we can see some a sharp bounce also. In that bounce, we have to check out 21,600 to 21,700 level. If that level is taken up, then we can see further rally. Otherwise, market will remain in the range of 21,400 to 21,700. We have to buy on dips and sell on rise. That would be the strategy, because after 2 weeks, we're going to have a interim budget also. So people are a little bit skeptical on this rally. So let's not get any momentum as of now, or let's not get in any rush. So don't chase any gap up or gap down. Let wait and watch. And as we are mentioning the range of 21,400 to 21,700, anywhere around 21,400, we like to go buy. Keep a stop loss below 21,300, and for the target of 21,700 for the Nifty. Coming to the Bank Nifty, yesterday we have seen Bank Nifty has created a inverted hammer on daily chart, taking a support at somewhere around 100 days moving average. With that, we are seeing a big gap also on daily chart, and it almost filled by the Bank Nifty. So now the pivot low for the Bank Nifty is 45,300, and 45,300 is again a 100 days moving average. So until and unless Bank Nifty is breaking down 45,300, we are not going to see any further low. Number one. Number two, the Bank Nifty PCR ratio even below than the Nifty PCR ratio is 0.66. So again, it is trading into the extreme oversold territory for the Bank Nifty. So there are chances we can see some bounce. So buy on dips would be the strategy, or even at current market price, we can go long, because the risk reward ratio is favorable in favor of bulls only. So as of now, Bank Nifty closes somewhere around 45,700. So any dip towards 45,700 to 500 would be the buy opportunity. Keep a stop loss below 45,300, and we are looking to achieve again a target somewhere around 46,300 to 46,500. So this is going to be a range for the Bank Nifty, 46,500 to 45,300. So market will remain in this range. A stock specific momentum will be there. So do not chase any gap up or gap down for the indices. You definitely will find good momentum in stocks.
Okay, that's a good take on both Nifty and Nifty Bank. You already know what is to be done today as well. Let's also welcome Mayuresh Joshi, Head of Equity Research, William O'Neill, India, now joining in. Very good morning to you, Mayuresh. Good to have you back with us. And I think you both are our lucky charms, because we are going to be seeing some green ticks after those 3 days of fall on the markets as well. So, the GIFT Nifty is indicating a recovery from the markets. We already saw some signs towards the last half and last 1 hour of trade, while last half an hour of trade as well. But overnight, we've actually seen the foreign outflows continue 2 days in a row, over 10,000 odd crore rupees. What does that really indicate for the markets?
Morning, Sakshi. Morning, Kiran. So two things. One, obviously, I think there will
I
be...
guess, are you on mute? Please, could you check?
No. No.
Okay.
Can you hear me?
Yes, now I can hear you. Perfect.
Sure. Morning, Sakshi. Morning, Kiran. I think the outflows is an adjustment in terms of some reallocation that happens towards global portfolios. And obviously, looking at the global context on how macros are probably placed, India structurally still seems to be the best market, both in the emerging and the developed space, at least in the foreseeable future. So it's just a normal adjustment which probably happens, money being taken off the table, some reallocation in terms of some portfolios for certain FPI stroke FIs. But generally, I think do not see a huge kind of a structural downside for the market. As we see it at Marketsmith India, the 10-week moving average, which is at 21,000 odd, is going to be extremely critical for the Nifty. And if that holds and supports any kind of volatility because of the global cues that we are probably witnessing, some element of profit booking as well, I think that should form a good base case for the markets as well. So no structural downside for the markets. Yes, bank earnings have been a little bit disappointing to what the street was expecting, but it was always expected, Sakshi, that bank earnings will be a little bit weak over the next couple of quarters, including this one. But as the rate cut cycle starts coming through, my own sense is that a whole host of dynamics will change for rate sensitives as well as the financials.
Okay, so that's the take coming in. Mayuresh, why don't you share with us any one or two picks that you have that investors can watch out for?
So we've got a couple of stocks on our watch list, and interestingly, I think they are coming in from the pharma space. Something like a Zydus Life, it is if it pulls back, I think becomes a good stock to be kept on your watch list. Two, three things. One, the US formulations business expected to grow at a steady state. They've received a good number of approvals over the last few months and weeks, and therefore, I think the new launches that come through will hold US revenues in good earnest as well. The Indian domestic formulation business, specifically the branded one, holding up well. The consumer wealth wellness business is holding up well as well. And therefore, the EBITDA margins for 26, 27 odd percent should be largely sustainable. Balance sheet largely no debt on the books, so it's cash rich. Expectations in terms of how the new facilities will ramp up in terms of new launches, specifically FTFs when it comes to specialty launches and niche launches in the domestic space. The nephrology and the oncology segment, which is the fastest growing segment contributing to better margins, should grow at a reasonable pace as well. So this is one stock that investors should definitely keep on their radar. The other one that should also be on your watch list is Gateway Distriparks. Both the stocks is something that we are carrying at MarketSmith on our buy watch lists. 112, 113 is the key levels to probably look out for this one. A little bit biased on this one, primarily in terms of personal holdings as well as suggestion to clients as well through our app on the watch list, as I said. But two things. One, I think the dedicated Western Railway corridor, as it fructifies and as it completes over the next few months, Gateway being a key player in railway logistics is going to be a key player as this entire infrastructure comes up. A large part of the trade, specifically in terms of rakes, 31 rakes is something that they own. They have 5 ICDs on the western coast, 5 CFS on the eastern coast as well. So I think they are very well managed in terms of their overall balance sheet as well, a 3% dividend yield. The margins are pretty reasonable as well. And you can see significant amount of uptick as the rail corridor comes through over the next few years, and that will lead to significant amount of volume growth. So this is one stock that we can also be kept on watches.
Okay, Zydus Life and Gateway Distriparks, the two stocks that we will continue to watch out for next few weeks and months as well. It is a long-term holding that Mayuresh has recommended. What we'll do is we'll take a 30-second break, come back. We'll also take the top picks from Kiranjani as well. Stay with us, viewers.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi Batra, and with me are two very special guests on the show, Mayuresh Joshi and Kiranjani. Both of them are sharing with us their top ideas in the current market scenario as well. Meanwhile, just actually look at the market pre-opening raise. Remember, the GIFT Nifty was indicating a 54 point of a jump for the markets, and the ticks are higher, 21,834 on the Nifty, 372 points higher, and 72,000 again on the Sensex that can be seen, 837 points higher, but we will actually wait for the markets to settle down. This is like a very, very sharp, exuberant tick that we're looking at. The rupee has opened at 83.16 at the current level as well. And we will continue to watch out for all these other stock ideas as and when they settle down over the next few minutes. Kiran, tell us your top two stock ideas that you're going with today.
So actually we have two ideas and both are the chart setup are contradictory. First is the from the IT space, as we discussed that the IT space is into the high top, high bottom, I mean rising channel pattern. So on any dip we would like to go long on IT. So first pick is from IT is Infosys. We are seeing that since last couple of days market is into the lower bottom. However, the Infosys is doing well in during this time frame. So if you check the lower time frame chart of Infosys or even a daily time frame, Infosys is looking very strong. Momentum indicator is trading into the bullish zone, and recently we have seen market Infosys has recovered from its lower low with the high volume. So it's suggesting that in coming time we can see a very sharp run should come in Infosys. So at current market level 1640, we like to go long for the target of 1670, and we will keep a stop loss of 1690. So Infosys would be the first call. Second call or second recommendation is from the Kotak Bank. As we mentioned about the during Bank Nifty commentary that we like private banks. So in private banks, we like Kotak Bank. There are two reasons. Number one, Kotak Bank is sustaining or consolidating somewhere around this 100 days moving average. Number one. Number two, previously we have seen inverted head and shoulder pattern breakout somewhere around 1770, and post that we have seen a sharp rally towards 1900 even. So market is again retesting its previous breakout level 1770. So we are seeing a very good risk reward ratio at current market price. So we like to go long on Kotak Bank also for the target of 1820, and we are keeping a stop loss of 1754. So Kotak Bank buy and Infosys also a buy.
Okay. All right. So that's Infosys and Kotak Mahindra Bank for you as top ideas from Kiran Jani for today. The Nifty is now a little more sensible, 21,720, 258 points, still higher on the index that we can see, almost a 1,000 point tick on the Sensex as well. We hope these levels sustain when the markets hit open as well. A slew of earnings that have come about, Mayuresh. So I want your reaction to a few of them. One, Poonawalla FinCorp, phenomenal earnings on that one. The stock is already ticking higher by almost 4% in the pre-opening trade. And the other one would be IndusInd Bank as well. Decent set of numbers, but the stock's reacting on the downside.
I think both of them reported a solid set of numbers. In fact, I attended Poonawalla's FinCorp con call yesterday, Sakshi, and the management sounded very, very optimistic in terms of new products that are expected to come through. Also, the optimism is driven by the fact in terms of the seamless technology that they're probably deploying, which probably means that a lot of cost optimization happens in terms of business delivery that gets reflected in terms of return ratios. Obviously, valuations are a little bit on the higher side, so anybody holding can definitely hold on. When it comes to IndusInd Bank, I think a decent set of numbers because a large part of the universe probably believe post HDFC Bank numbers that the entire banking system might report similar trends to what HDFC Bank has probably reported. But I think the key differential here is the base that HDFC Bank works out of. I think it's a huge, huge base that the bank is working out of. And therefore, the other banks comparatively are expected to do a tad bit better, which IndusInd Bank has also probably done. So anybody holding on can definitely hold on. The only point here to be made is deposit mobilization is an issue for the industry as a whole. Obviously, if you do aggressive deposits in terms of managing your book, NIMs and spreads will get compressed. But I think the larger, bigger picture is at some point rate cuts will start in the next financial year, second half of the next calendar year, hopefully merging those two time angles together will probably mean that as rate cuts happen, the pass-through element becomes faster for the financial system as a whole, which should incrementally benefit a lot of these players from the second half itself. So the pain might persist in terms of a few of the parameters over the next couple of quarters, but it should come back very, very strongly in the second half of the next financial year.
Okay, HDFC Bank ticking higher, almost 3% up, 1540 kind of levels being seen here. Kiran, what would you say on HDFC Bank after those 2 days of sharp fall?
So looking at HDFC Bank, I believe that we should not go rush behind the HDFC Bank. However, we are seeing a sharp support from rising trend line. If you check weekly chart, there is a long-standing rising trend line is there. But still, we believe that we should wait for HDFC Bank to form the bottom. Since last 2 days, we are seeing a gap down opening, and none of the low is been supporting the market. And market is not even carrying any of the levels, and it is not recovering from the lower low from that reason. So as of now, we are wait and watch only for the HDFC Bank. We are seeing the support somewhere around 1460 to 1440 level. So if the fall is remain continue, then we are waiting to market to touch somewhere around 1460 to 1440 level, and then we will identify the bottom over there, and we will find the opportunity. So as of now, at current market price, we are not interested to go long on HDFC or finding any kind of a support.
Okay, fair enough. The other big number that we will be watching out for in terms of earnings is Reliance Industries today evening. Maresh, I want to ask you on this one. We've seen recent upticks coming in on Reliance Industries. It's come out of slumber, of course. Your own sense of the kind of numbers that we can expect. Geo Financial Services was disappointing. Would that have an overhang? It's a separately listed company, but because of the stake right there, what are your expectations as far as geo and retail numbers are also concerned for Reliance Industries?
So as far as geofinancial is concerned, Sakshi, I think it's just a business which has started off. So I think the initial few years are going to be not revenue accretive or bottom line accretive. So I think the street probably understands that. When it comes to the core business of Reliance per se, I think the expectations are largely that the revenue from the oil and gas business should be relatively stable. You are probably expecting the downstream business also to remain stable. The refining margins will definitely be better as always because of different feedstock options that they've got. And the retail part of the businesses, both Geo as well as Reliance Retail, should continue their good show because this is the quarter where I think a lot of festivities will also get embedded. And a large part of market expectations, Sakshi, is also some element in terms of ARPU increases for the industry as a whole. So if that probably happens, I think there might be a lot of cash improvement in the next few quarters for the standalone telecom business. But the retail businesses, as they contribute 50% to the overall EBIT, should continue their good show, which will support the overall earning momentum. New businesses, specifically, I think biogas, hydrogen, calibrated investments going there as well. Reliance is sounding very, very optimistic in terms of a few of these plans going operational in the next few quarters, which means I think the capex is working in the right direction without too much of a leverage portion on the overall balance sheet, indicating better ROEs as we head ahead. Good EPS RS ratings as we see it at Markets with India, and therefore I think we remain optimistic on the stock from a medium to long term perspective.
Okay, and almost 0.5% higher for Reliance Industries in the pre-opening trade, which is settling at 27.52. Kiran, your own take on Reliance Industries, how should one be going about ahead of earnings on this one?
So looking at Reliance daily chart, we have already seen a very good breakout from level of 2600. Flag breakout was there, and post that we have seen a sharp rally towards 2780, 2790. Since last 3 days, we are seeing on lower time frame price are trading into the falling channel. However, we are seeing on daily time frame there is a very good support somewhere around 2700. And yesterday we have seen a similar price action also that after making a low of 2700, price has given a very sharp recovery towards 2730, 3035. So at current market price or any dip towards 2710, 2720 would be the buy opportunity. Keep a stop loss below 2700 as the result is ongoing. So there will be a might volatile sessions. But let's keep a stop loss of 2680, I believe, because of the result volatility. So just giving a breath of price, keeping a stop loss of 2680 and looking at current market price, we are again heading towards 2800 of target. So definitely buy on dips will be the strategy for the Reliance with the stop loss of 2680.
Okay, the pre-opening prices have settled 600 points higher, 71,786 on the Sensex, the Nifty at 21,615, 152 points higher in trade. And when we also look at the kind of momentum that we are seeing even on the broader markets, the mid caps are up by 410 points, the Nifty mid cap 100. That's the one that's showing strong ticks, 46,103 for the Nifty Bank as well. Again, a 389 points uptick that we are looking at. So we are looking at a gap up start as far as the pre-opening levels are concerned. What else should we look at right now? Oracle Financial Services, that's the stock that I want to take your view, Mahesh. Phenomenal earnings, and what day that we saw yesterday, 28, 29% of a move intraday. How would you look at the company, the earnings that have come about, and what's the trajectory ahead for Oracle Financial Services?
Strong set of numbers. Never really expected this kind of a reaction, Sakshi, very frankly. But again, it's a platform-based business. The global commentary for OFSs has also been extremely strong and robust. And therefore, the large part of expectation that the street now believes is that the delivery that will happen in terms of orders, the expectations in terms of more orders flowing in the next few quarters and better execution happening on these orders will mean that the EBIT margins should sustain, the reported cash flows should sustain and improve at a compounded pace over the next few quarters. And that is probably getting reflected in price. I think the price action has been a little bit too much to digest in one day. So I think the stock might just consolidate around these levels.
Okay. What are the charts telling you, Kiran, on Oracle Financial Services? And after the substantial almost 30% uptick that we saw yesterday, a lot of investors who may be feeling a FOMO on this one, how should they be approaching the stock?
So at current market price, we again like to wait and watch for this Oracle Finance also. Reason being, there was a big consolidation pattern breakout from 4,400 or 4,500 level. After that, the target was somewhere around 5,100, which was this all-time high. And yesterday we have seen a sharp rally towards 6,000 level, and it has touched all its target. So as of now, at current market price, we are not keen to go long on this particular counter. Reason being, risk-reward ratio is not in favor of any size of bull. So as of now, whoever is holding this stock, particularly hold this stock with a stop loss of 6,000. And for the fresh entry, I would suggest wait and watch, or either you can see some other technology counter like we has mentioned about the Infosys or even a TCS or even a Wipro. So Oracle Finance, whoever is holding, hold with the stop loss of 6,000. But for the new entries, we would like to avoid.
Okay, fair enough. Let's look at a few brokerage houses of reports also at this point in time. 2 minutes to go for the markets to open. On HDFC Bank, we have a CLSA report that's given a buy rating, target price of 2025. Then they are saying the key concerns were only on deposits and NIMs. On deposits, some clients believe that it was a macro problem, and they also expect the RBI to reduce the $20 billion liquidity deficit by a mix of foreign purchases, and that's going to be an overhang. While most of the domestic clients, they are saying, were unhappy, there is a slight feeling that it's going to be different for foreign investors, many of whom believe that we are near the end of the EPS cut cycle for HDFC Bank. On IndusInd Bank, Citi has given a buy rating with a 2010 target price. They believe that the headline print is better than estimates and supported by flat NIMs at 4.29%, treasury gain of 2.3 billion rupees. So that's again a positive. On Tata Communications, we have a CLSA report. The target price of 2045 on this one, overweight rating. Here they're saying that the data revenue was up 29% and the revenue was in line and EBITDA above estimates. High growth in digital portfolio services is positive, and comfortable gearing going forward as well. And on Titan, again, we have a CLSA report. Here's a buy rating on this one, 44.94, and they're saying that the Tanishq making charges scale with price are not so for competitors. Tanishq's focus on design, consumer trust, and customer service allows the brands to charge a significant premium, which is reflected in the operating margins and returns as well. On Tata Communications, Mayuresh, if you could give us a take as to what you make of the earnings and what now would you expect on the stock?
I mean, decent set. And obviously, I think the longer term trajectory, Sakshi, that they put out a few months back in terms of their vision on what they need to achieve in terms of revenues, in terms of client sizing, in terms of their product mix. I think they are taking steps in the right direction with every passing quarter. I think so. The longer drawn vision that they probably have, if they get close to achieving that every passing quarter, my own sense is that the street is going to reward this stock very, very handsomely.
Okay. Any technical view that you have, Kiran?
On which counter?
On Tata Communications.
Okay. Looking at current market price on Tata Communication, the daily chart is fairly set up a very good in consolidation. Now there are very good chances if prices sustain 1800, then
Yeah, Kiran, we have the market opening race, so let's go across and see what the markets are indicating. 21,611 on the Nifty. You have a 146 point of a jump, so 0.6% of an increase, a gap up opening for the Nifty. You have the Nifty mid cap index, that's 0.8% higher in trade. The Sensex opening 0.7% up in trade. The Nifty bank 0.8% higher, 46,099 odd levels. We're also looking at the Nifty IT index, that's over a percent higher in trade. The small cap index also over a percent. So the IT index is driving the move. The banking stocks also looking very, very positive at this point in time as well. A strong opening beat broader markets. Let's look at the advance and decline ratio. 1529 advances to 124 declines on the NSE as of now. 21,600 as of now, 617 for the Nifty. Strong move, 0.7% higher, and you can see a momentum on the upward side. FMCG stocks are higher, and the Nifty Pharma Index is also up. The Nifty Realty also 0.8% uptick in trade. The Capital Goods Index is up by 0.8% as well. Then you also have the Oil and Gas Index that's ticking higher, almost by 0.6 odd percent. Uptick that can be seen on this one as well. It's a broad-based recovery that you're seeing, a very, very sharp recovery coming in on the markets right now. 21,622 for the Nifty 50, about 0.76% higher in trade as of now. And of course, it's the big heavyweight indices, IT index and the banking index that's really supporting the market momentum as of now. You have the Nifty gainers like Bajaj Finance, it's up by over a percent. Axis Bank, ICICI Bank over a percent higher. So the banking names are up in trade. Asian Paints, NTPC, Adani Ports are the other movers. EMS Limited about 5% higher, 481. Easy Trip Planners, 47.2. 3.9% higher in trades. That's the other stock that's ticking higher. NTPC up over a percent. Poonawalla FinCorp, good earnings, 3.7% higher at 508 odd levels coming in on this one as well. IndusInd Bank down in trade 1.8% after the earnings. Persistent Systems, remember this company is going to be on focus, 1.3% higher in trade as well as of now. Let's also look at some of the IT stocks. Tech Mahindra 2.5% higher. Wipro up at 491 odd levels, 1.7% up in trade. So that's the one that's moving higher. Metro Brands is down by 5.5%. Remember, the earnings have been disappointing and the stock is now at 1146 odd levels. Oracle Financial Services, slight downticks, 1% lower in trade right now. Let's also look at some pharma counters. Now, Cipla is moving up in trade, 0.3% up in trade, 1324 being seen on this one as well. All right, Infosys, that's the one that Kiranjani had picked out, 1% higher, 1659. We'll also look at Zydus Life, that was the pick of Mayuresh Joshi, and it was already ticking higher on the index in the pre-opening trade. Yes, it's a positive tick. Your own sense, Kiran, on the market opening?
So as since last 2 days, we are seeing that market was trading into the lower top, lower bottom pattern with multiple gap down and everything. On intraday, both of the indices were trading into the highly oversold territory, and this gap up was estimated only. So as of now, at current market price, again, we don't like to chase this gap up. There are two reasons. Number one, the gap up is resistance somewhere around 20 days moving average. If you check the Nifty daily chart, the 20 days moving average somewhere around 21,600, and market is also trading at same level. So let's not chase this gap, number one. Number two, let's sustain this gap up opening or a level somewhere around 21,600 to 21,550 level. If market keeps sustain this level, then only we would like to go long. So at current market price, we are again just wait and watch. And as we mentioned in opening commentary also, we are looking a stock specific movement keeps continue. So as mentioned about the technology shares in the private bank, the Infosys is doing good. Even Kotak Bank is doing good. In fact, if someone wants to take exposure, they can look for the pharma also. Sun Pharma would be the pick looking at the current market price and the opening of the market. The Sun Pharma is giving a breakout from the flag pattern breakout at current market price. If price keeps sustaining above 1340 level, then we can expect prices to touch somewhere around 1370, 1380, 80 in upcoming time. So Sun Pharma would be the pick at current market price. Go long, keep a stop loss of 1320, and we are expecting short-term target of 1400.
Okay, opening call, Sun Pharma, it's the pharma stocks that are ticking higher. Zydus Life now 2% up. That was a pick by Mayuresh. Mayuresh, pharma stocks, is that going to be the focus of the next few days?
It will be, Sakshi. I think pharma healthcare will again take some element of precedence because of the volatility that we probably see. And if medium-term investors are a little bit more selective here, I think there is enough amount of sector rotation as we see it at Cancelim that can probably get played out in these sectors. They are losing a little bit of steam, but somewhere I think the earnings should start holding up from the next quarter for a select few of these pharma names, which are specifically, as I said, either into the branded generics or the branded formulation business, where the pricing element still sustains with these players. So yeah, I think selectively this space probably looks well placed from the O'Neill lens.
Okay. A lot of IT stocks are taking higher. Tech Mahindra 2.5% up, Wipro up by 1.5%, Emphasis up by 1.9%. You also have the mid-cap IT names, Nuclear Softwares 2.5% up, 3% higher for Firstsource Solutions. Birla Soft, that's the other one that's taking higher in trade as well. You also have HCL Tech and TCS ex-dividend today. So that's going to be in focus too. Mayuresh, if I have to ask you, large cap IT names versus mid cap IT names, which way are you going to be, going forward from here? It's the mid cap IT space that were the clear winners of the past. Is it the same space that will continue to outperform?
It will probably in the next couple of quarters, to say the least, Sakshi. I think the numbers that were expected from large cap IT were far worse off, and what the companies delivered were relatively better numbers compared to that. And therefore, I think the short covering stroke bounce that you probably saw in large cap names was a given. But mid cap IT, the commentaries have been very, very consistent. The commentaries specifically leading up to Q3 are indicating that they are not seeing any pricing issues. Demand still remains very, very robust. The order books remain extremely resilient in spite of the softness that we're probably seeing in the developed market. And all these elements put together mean that the constant currency and dollar revenue growth should sustain at a reasonable pace in the next few quarters. The EBIT margins as well, assuming all wage hikes, a seasonally weak quarter, expectations of the client budgetary cycle, should also probably be in favor for mid-cap IT stock, because I think the client budgeting size is something that favors them, which will still continue at a reasonable pace as automation, generative AI, which is the latest hot word on the street, keeps on growing at a good pace. So relatively, mid-cap IT, expensive than large-cap IT. A lot of these stocks have formed late-stage phases, as we see that in Cancelim at MarketSmith. But selective within the space, some names still look good compared to the large-cap names.
Okay. Kiran, to you, from the mid-cap basket that's also recovering. And remember, it was the Nifty Mid-Cap 100 Index that actually indicated that a recovery is perhaps coming on the broader index just in the last half an hour of trade yesterday. At one point of time in yesterday's trade, the mid-cap index was down over 2%, and we did see, flattish to almost a green close for the Nifty Mid-Cap Index. Of course, this index has been an outperformer, 40%, 50% surge over the last 1 year. Are there still any stocks that you would go behind at this point in time, Kiran, from the mid-cap basket?
Yes, definitely. Info Edge would be the preferred pick for from the Nifty IT mid-cap space. Looking at current market price, we are seeing that the stock price is touch is almost 2.5 or 1.5 year highs. It's 5,000. We have seen the stock price was trading completely in downfalling channel since 2023 March month. Prices started trading into the heart of high water, but I mean rising channel. Multiple inverted head and shoulder pattern and cup and handle pattern breakout from that levels, and today the market price is 5,100. And as I mentioned, that 5,000 was the traditional resistance prices crossed, and now whatever the dips are coming, it's taking a support of 20 days moving average. Even it's not testing it 50, 100 and 200 days moving average. It's continuously showing a very strong momentum. So Info would be the preferred pick at current market price. Keep a stop loss below 5,000, and we are looking target of 5,700 to 5,800.
Okay, fair enough. Okay, the other pick that Mayuresh had, Gateway District Parks, is also showing very strong momentum, 2.6% higher in trade right now. Let me take, Kiran, your view on Gateway District Parks. Technically speaking, how is the stock really looking at 112.8?
So looking at the Gateway daily chart, the stock price into the height of high since May month, and the prices has taken is very a strong bullish trend and taking all the support at 20 days moving average whenever the dips are coming. At current market price, we are seeing a cup and handle pattern breakout. Prices has retested its 120 level, and again it's testing its breakout level as well as the 20 days moving average price. So at current market price, the risk reward ratio is very much favorable into the bulls favor. We can go long at current market price as 112, 113, keeping a stop loss below 105, and for the target of 120 to 130 zone. So definitely one can go long.
One can go long on this one as well. So you both have a fundamental and a technical stamp coming in on gateway distillery parks as well. We have pharma, IT that we have already discussed. Some of the banking counters, I think Kotak Mahindra Bank, Kiran, has been your pick as well. Um, from the PSU banking basket, now I want to ask both of you. We did see again a jump happening yesterday on a downward kind of a day in the markets for the PSU banks. They were largely resilient. Mayuresh, what do you see as an opportunity here? Is it too late for an entry point into the PSU banks for all the investors who've missed the rally thus far?
So I think par for course. I think the banks will perform relatively better, and valuations are not too expensive even as we speak. Obviously, the price move has been substantial for the PSU banking space as well over the past few quarters. But a large element in terms of how earnings will play out over the next few quarters still seems to point out that numbers, advances growth, deposit growth will remain robust. Now, the deposit story that we keep on speaking about, let us understand that a lot of the PSU universe, a large part of their basket are a lot of people who are salaried, who are probably pensioners, so on and so forth. And therefore, this pool is very well protected in terms of deposit mobilization that these banks can probably garner. And therefore, their cost of borrowing, the deposit mobilization remains very, very robust even in this scenario. NIMs obviously will be a little bit on the lower side as discussed for the space as a whole, but it looks like an interesting space. Bank of Maharashtra, Bank of India is something that we keep on holding in our global portfolios, but you shouldn't chase this. I think you should wait for some pullbacks on these counters.
Okay, shouldn't chase this. Kiran, anything specific from the PSU banks that is appearing very strong on the charts per se?
Discussing about the PSU Bank had a very good time. And since the last 1 year, we are seeing that the large PSU banks are into the consolidation phase. And again, they are giving a breakout from that particular zone. So we are liking a large PSU bank only. The State Bank would be the preferred choice. Reason being, we have seen a big consolidation phase from December 2022 to till today. And from now, we are seeing prices is closing and sustaining below its resistance level of 620 to 630 level. Prices have made a high of 660. However, we are still seeing that there is a steam is left out. So at current market price, we would like to go long on State Bank, keep a stop loss below 610 or maybe 600 for a longer term time frame, holding horizon, I mean to say. So keep a stop loss below 600 and go long on the State Bank. We are expecting target of 700. Definitely 700 can be touched. So State Bank would be the preferred choice.
Okay. I will just again look at Oracle Financial Services shares. Remember, after the move that we saw of 28%, 29% surge yesterday, the stock opened with dips, but it is again up 4.5% higher, 68.50 currently. Kiran, on Oracle Financial Services, what do you expect now?
So again, we are not supposed to chase this rally for definitely reason being risk reward ratio. Whoever is holding this stock now trail your stop loss as we mentioned 6,000. Now keep a now trail your stop loss somewhere around 6,400 or maybe 6,300, which are the lows for today's market. And looking at monthly chart, the consolidation and the flag pattern target, there are chances we can see price target of 7,000 should be touched. So 7,000 would be the psychology as well as per the technical pattern is going to be a target. But the price is already trading at 6,800, and if we are keeping a stop loss of 6,400, so 400 points is our stop loss and the 200 points is only the target. So at current market price, it is not advisable to go long. Whoever is holding this particular stock, keep a stop loss of 6,400 and wait for the 7,000 target.
Okay, fair enough. So that's the take coming in on Oracle Financial Services. The market's now 192 points higher, 21,654 for the Nifty. It's holding on to those gains, 652 points higher, for the Sensex as well. A lot of sectors are all buzzing in trade. IT, pharma, banks, they're all up in trade right now. The Nifty Bank 400 points higher in trade as of now as well. So it's a broad-based recovery that you're looking at into the markets. Good time to 15 minutes off the trade to take a break right now. We'll take a 30-second break. We'll return and we'll discuss some more interesting theme and ideas. Remember, this weekend and on Monday, then we have, Ayodhya in action. And we are going to be discussing the tourism theme up next. So stay tuned with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Market Today on Business Today television. I'm Sakshi Batra. With us is Kiran Jani, Mayuresh Joshi, who has been telling us all the kind of stock ideas that you should be really looking at. We've seen a smart recovery in the markets from yesterday, 21,659, currently 196 point of a jump, 0.9% higher in trade. A similar tally when you talk about the Nifty Bank as well, 0.9% higher, 438 points of a jump for this one, 46,154. And it is a broad-based, rally that you're looking at into the markets. And Sensex is also up by almost 1%, 71,861 being seen on that one as well. Let's, as promised, talk about the exact tourism theme that has been on the buzz. Remember that on 22nd, we are going to be seeing the inauguration of the Ram Temple in Ayodhya. And of course, a slew of people are rushing to that place, the newest spiritual hotspot for tourism that we are looking at. And amidst that, we are looking at a whole host of hotel stocks now buzz in trade. Over the last few trading sessions, we did mention to you stocks like Chalet Hotels, EIH, Indian hotels, for example, Ease My Trip Planners, the tourism, booking company. Then we also have stocks like Taj GVK that's up in trade as well. Lemon Tree Hotels, that's the ones that's sticking higher. Look at all of these stocks that are buzzing in trade. And this is going to be a mega country event that we are looking at. Kiran, to you, how are you really looking at the entire hotels theme as of now? We're looking at a slew of announcements coming in from them as to how they will be looking at creating more and more hotels going forward from here in Ayodhya. And is this a space that is going to be extremely interesting amidst the Ayodhya launch?
Definitely. So we have already seen resorts and hotel sectors were doing good after the COVID breakdown. We have seen a revenge travel theme, and the hotel stocks and the resort stocks or even tourism stocks are got 200 or 300% kind of a return. And now this Ayodhya things is already putting a fuel in this fire. So at current market price, Chalet Hotel looks very promising, and another stock is ITC. However, ITC is very much conglomerate kind of things. Where hotel is also there, we are seeing FMCG is also there. So if anyone is want to play in hotel sector only or tourism, then Chalet Hotel would be the preferred choice. Reason being, we have seen a steady and very strong bull run in particular sector, in particular stock. I mean, we have seen a multiple breakout, and the similar breakout is panning out at current market price also. Recently, stock price has given a breakout from double bottom pattern. It's a reversal pattern, however, it is formed at high top and prices were taking a support of 20 days and 50 days moving average. Since then, that breakout, we have seen a prices has touched 760 level. So at current market price were trading somewhere around 727. If any dips comes towards 7,000 would be the preferred buy choice. So at current market price, we are not recommending buy, but we are waiting dip to buy. 700 would be the preferred choice at good level to accumulate this particular stock, and keeping a stop loss below 680 or 650 for the long term price, long term horizon. And we are like to give a target somewhere around 1,000 rupees at looking at weekly or monthly chart. So if someone is ready to hold this stock particular for the 6 months to 8 months, then definitely buy on dips would be the strategy. Keep a stop loss of 680 for the target of 1,000 rupees.
Okay. What about the railway pack stocks, which are also in flavor amidst this entire move? You know, stocks like RVNL, IRFC, they have been on a stunning momentum. IRCTC, this entire theme has been on a buzz. Do you still see promising signs on the charts that can be still looked at as fresh buying opportunity?
Yes, definitely. So if we check the railway counter, we have already seen a sharp rally in a small railway counter like IRFC, RVNL. But at current market price, we are not very keen to buy those stocks as being a risk-reward ratio concern. We are very much like to go long on IRCTC. We recommended this stock on particular on your channel multiple times since 600 levels.
Yes.
Now the price
Yes.
is sitting at 950 level. Even at current market price, we are like to go long on IRCTC. We just discussed about the tourism and hotel stocks. After COVID, we have seen a sharp rally in that particular sectors and that particular on based on that theme. We have seen that IRCTC and even Indigo, the both are the prima facie companies which are helping for the any tourism and any kind of a resort and all this tourism theme. But these both stock were into the downfalling channel. Since October 2023, we are seeing that both prices are started trading into the height of high bottom pattern. And since then, prices have already given a 50-60% kind of a return. However, still the catch-up rally is still pending. So at current market price, IRCTC looks very much favorable pick at current market price. We are not like to go long on Indigo at current market price because the crude tailwinds is there. So Indigo is not in our radar, but IRCTC is definitely in our radar. Any dips towards 900 would be the preferred long candidate. Yesterday we have seen prices at middle low of 870 and a sharp recovery on 800 on 900 level, and today prices again started at height of high bottom pattern only. So IRCTC would be the preferred choice at any dip. We would like to go long, keep a stop loss below yesterday low, which is 870, and we are likely to touch somewhere around 1100 to 1200 in upcoming time. So IRCTC would be the preferred choice.
IRCTC as the preferred choice from the railway pack as well, and Kiran has been recommending it from over 600 kind of levels. It's now taking even higher, 900 levels, and you know there is still a lot of opportunity that investors can look at in IRCTC even going forward from here. So that's the entire tourism theme for you that we've discussed amidst the big event that's going to unfold on 22nd of January. Now, apart from this, let me just take your view, Kiran, on Metro Brands. The shares are now down nearly 5%. The footwear retail chain had reported a 12.7% year-on-year decline in the net profits at 97.8 crores for the third quarter. In the corresponding year, Metro Brands had posted a net profit of 112 odd crores. The revenue from operations, however, have just increased 6% to 635 crores. And in the last 1 year, the stock has gained about 31%. Of course, it's the higher base of the last year that's impacted the sales this time around. Technically speaking, on Metro Brands, how would you really look at this dip?
So if you check Metro Brands long-term chart, since IPO, we are seeing prices trading into the height of high bottom pattern only. And any dips since the IPO, it's bought with support from 20 days, then 50 days, and then 100 days moving average. So stock was into the very peaceful and very strong height of high bottom pattern. The recently, whatever the corporate earnings and reports come, prices is trading into the prices has given a breakdown from it 100 days and 50 days moving average support. But still, prices are taking a support of this rising trend line, which is started since IPO. So at current market price, we are finding very good support and risk reward ratio. Number one. Number two, it's 200 days moving average trading somewhere around 1100 only. And today the prices is trading at 1160. So this is 1100 to 1150 would be the accumulation zone. Anyone who will want to enter in particular sector, Metro Brand would be the preferred choice. Reason being, as risk reward ratio is very much favorable. Second reason is technically prices were consolidating between 1100 to 1000 rupees for a couple of months, and post that we have seen after a breakout the rally towards 1400. So it's actually a very good buy at current market price. I'm again repeating, the accumulation zone is from 1100 to 1150. This 50 rupees is your accumulation zone. Keep a stop loss below 1050. And if you are ready to give 3 to 6 months, then again after during this time, we can again find target of 1400. So risk reward ratio is very much favorable. Keep accumulating between 1150 to 1100. Stop loss of 1050 and target is 1400.
Okay. The one last talk that we will discuss on the show is Z Entertainment. Kiran, to you, 2.5% down. The stock will be again in focus. There are news reports that suggest that the fate on creation of the $10 billion media giant could be decided today. There were reports yesterday saying that perhaps there could be an agreement on Puneet Goenka stepping down from the leading position of the merged entity as well. That has been a standoff point between the two, which also led to reports that suggested that perhaps this deal may be called off. But 22nd January, remember, is the D-Day when they have taken that extension of the timeline to decide whether they are going with this merged entity or not. And today is 19th, and there are reports again floating that perhaps today we could get some information as far as what has been really decided by the two media giants. Your own sense of how would you really look at Z Entertainment amidst this news flow?
So looking at the news flow, we are seeing this news flow is coming since last 1.5 year, the Z and Sony merger, and because of this particular news and particular event, we are seeing a very high volatile sections are for the Z Entertainment stock price. Now we are seeing that prices has made a high of 380, 390 level. Since then, prices were trading into the lower lows, lower bottom time frame, meaning falling channel. Stock prices were trading below its all important moving averages, but we are seeing that prices has taken over its all moving averages since October month. And after that, even prices were trading into the in consolidation zone 240 to 260 level. Prices tried to give a breakout from 260 level, but again, this news flow it was the resistance only. And because of this news flow, prices started falling from 300 level to again, it's 240 level at current market price. Now at current market price, we are seeing prices is finding support at 200 is moving average number one. Number two, the momentum indicator is also formed. Some of the bullish divergence. It's very early to say, but the bullish divergence has started plotting into the oversold territory. So there are chances that the bottom is near. We don't know which is the exact bottom, but at looking at current juncture and the overall setup, the bottom is very much near. So at current market price, if a riskier trader can go long, riskier investor even go long at current market price somewhere around 240 to 220 level. Keep a stop loss below 200. And if you are okay to give a 6 to 8 months horizon for this particular holding, then it would be the definitely buy with the stop loss of 200. And looking at current market price, our initial target is 300. As soon as the 300 level is crossed, it's going to be a big breakout for this particular stock, and above 300, we can expect a target of 400 or 450 even. So as again, 6 to 8 months would be going to be a horizon at current market price, or any would like to go long, keep a stop loss below 200.
Okay. All right, so that's the view coming in on this one. Many thanks, Kiran, then for being with us on the show and discussing all of these stock ideas for all our viewers. Checking the markets yet again for you, the Nifty Bank about 0.8% higher in trade. We're also looking at 46,074 level for the Nifty Bank as of now. The Sensex up 579 odd points. The Nifty is 170 points higher in trade as of now, 21,644. Slight profits are being taken from the higher point, but we will continue to see whether this is just volatility or will the markets be able to sustain this kind of a momentum towards the day's close as well. And now, ladies and gentlemen, it is time to get you some exciting conversations from Davos, the World Economic Forum, in an exclusive interview with Business Today Television's Rahul Kanwal and Siddharth Zarabi. The World Economic Forum 2024 in Davos. Wipro's Executive Chairman Rishad Premji shared his views on the future of the IT and services sector, expressing his optimism. Premji is projecting a more promising outlook compared to the preceding year. Watch this excerpt from the exclusive conversation.
What's your outlook for the overall IT services sector? And we've seen some of the results sending a wave of positivity through the market. Of course, the markets reacted negatively because of global cues, but broadly speaking, how is 2024 looking like for you and the sector?
Yeah, look, I'm feeling a little bit better about the sector than I was feeling 2 months ago, right? We've come in at the top end of our guidance last quarter, and that's a reflection of just strong in-quarter execution, thanks to the momentum from customers as well. One of the early indicators I look at is just how discretionary spend, which is an important element in our industry, is shaping up. Our consulting business had a good quarter from an order booking perspective last quarter. So to me, that's an early green shoot. And I want to underscore the word early green shoot of things sort of looking up compared to where they were last year or last quarter. And I'm hopeful as you get into the second half of this year that things hopefully will look better than they looked last year.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Hello and welcome to Business Today Television. I'm Siddharth